Securities, an education and information firm on the Gold Coast in Queensland, Australia. And every morning I go through what happened overnight and we try to forecast what we're likely to see on our market. And we've got some recommendations and some technical and fundamental analysis. And by the way, we'll show you what is hot and what is not, and what you should hold and what you should fold. Well, overnight and from around the globe, we start with Wall Street. We're seeing the Dow almost closed steady from the day before. Here you see the 2 days before, so you can compare what happened over the last 3 days. The S&P 500 was down 0.34%. The Nasdaq was down 0.7%. In Europe, the Stoxx 50 index, which comprises most major European markets, was down 0.2%, and in London the FTSE 100 index was down 0.6%. In Germany the DAX was down 0.5%. In Japan the Nikkei index was up 0.4%, and in China the Shanghai index was flat. Yesterday on our market, look at what happened over the last 3 days for our market. 0.3%, 1.8% and 0.85%, 50 points higher, and we flirted with the 6,000 level. Actually, it reached above the 6,000 level for the first time since March and retraced back at the end of the day. And if you believe the futures, according to the futures, most likely the market will open. Actually, this was earlier in the day, in the morning, and we've got somewhere between 14 and 21 points down when the market opens. Gold was up $15.90 US per ounce, nearly 1%. Silver 0.2% up, $18, back to $18 after falling below the $18 the day before. Copper was down slightly, and Brent oil nearly $40 US per barrel, and crude oil almost steady at $37.33 US per barrel. And if you look at soybeans of course is affected by what China buys from the US, and we've heard that the government buyers were asked to stop buying soybeans from America. However, the private buyers continued to buy the soybeans. Anyway, $10.25 up to $8.67 US per bushel. The Australian dollar versus the US trading at 69.5. Remember, it was below 65 a few days ago when we said that we're likely to see the Australian dollar versus the US go higher, close to 70. And by the way, also Goldman Sachs predicted 70 cents is achievable within a few days, and we might see that today or tomorrow. And then who knows what's going to happen after that. Most likely we might see a retracement backward because of what we see in terms of our trade balance as well. The Australian versus the euros flat at 61.2, and against the British pound 55.1, again very flat. Looking at the charts from where we get up our technical indicators, you can see here the retracement all the way flirted around the 50%, tested the 61.8 Fibonacci, and now we're heading towards the peak between now and November, because there is an election coming up in America. We will not be surprised that the rabbit will be out of the hat from the Trump hat, and we might see that up to around the 29,000 once again. By the way, we predicted that after the election the market is going most likely drop quite a bit. This is actually the daily charts, and we can see here the stochastic being bullish, the parabolic stop and reverse being bullish, the non-day above the 21-day moving averages bullish. Look at what happened the last several days, up, up, up and away. Now it hit the 200-day moving average. Now if that candle closed the next few days above the 200-day moving average, well, that confirms my expectation that we're likely to see the 29,000 once again between now and November. Now in terms of our market, again we have retraced all the way back to 38.2% retracement, the Fibonacci retracement, flirting with the 0.5 Gann retracement, We zoomed through it very quickly. Only with 1 week it went up and then down, and now we are well above it, and we're likely to finish the week above it. So I would not be surprised at all that the 61.8% retracement sometime next week will be tested. And this is the daily charts. Again, the 9-day above the 21-day bullish, the parabolic stop and reverse shown by the red dots bullish, the stochastic being bullish, and we crossed above the 100-day moving average, and who knows, we might also follow the American market and we may test the 6,328, which is the 200-day moving average, and all the way up, up and away. In terms of volume, you can see that oh, by the way, before I talk about volume, look, among all these days we've had more advances than declines. Only one day when the decline exceeded advances. And look at the chart here, the volume. By the way, that very big one was actually represented by the 34% declines. Why? Because America was expecting Trump, as he's so unpredictable. He said, I'm going to talk to you the following day, which was Friday in America, and I'm going to tell you what I'm going to do about China. Well, he did very little about China regarding Hong Kong. He left the trade phase 1 exactly intact. Then dropped and started to increase again. The volume now 4,000, very close to 4 billion transactions per day. You can see the trend is up and up and up and up. In terms of advances over declines for week on week, you can see here we've got a lot more advances and declines on a week basis. Now the mechanical system, from where we actually design strategies for the investor, the conservative trader, aggressive trader, and very aggressive trader. And I've explained in previous presentation why the investor has got different strategy to the very aggressive trader. And here for the investor, we look at the monthly and the weekly charts. Here for the aggressive trader, we look at the weekly and daily. And you can see here that we are very strong for the American market. Gold, now we've turned actually bearish on gold for the very aggressive trader. And remember, we had the bullish for the investor for quite some time. Now we see that gold is most likely will drop in the next week. And for the very aggressive trader, we go bearish. Okay, we'll look at the Australian market after that, and we see how the gold sector is performing. Okay, crude oil, we were very strong across 3 out of 4 types of investors and traders, and now we're down to 2 only. So we're still very bullish for the very aggressive, but for the investor and the conservative trader, maybe it's time to take some money out. The Australian dollar still very strong, American dollar very bearish, so any currency against the US obviously is strong, as you can see here with the euro and the Japanese yen and the British pound. Okay, as far as our market is concerned, here we go. You can see that all our stocks, the top stocks mainly, are very bullish. We are bullish for the next few weeks. Rio and BHP very strongly bullish. We have been bullish for BHP and Rio for a number of days since last week, even before last week. In terms of Wesfarmers, we continue to be very strong on Wesfarmers. Let's see what happened yesterday. Wesfarmers was up 1.7%. BHP was flat, only 3 cents down, but we remain bullish. And Rio was up 1%. We are still bullish. TCL, which is the Transurban, we're still bullish despite 7 cents drop yesterday. Telstra, bullish for the very aggressive trader, and yesterday the market was up 2 cents. Actually, Telstra was below $3 only a few weeks ago. Woodside Petroleum, bearish yesterday. We were down yesterday 33 cents, but we remain to be bullish, remaining because of the gold, because of the price of oil. Okay, yesterday we've seen Flight Centre, Qantas had very good days, and so is CSL, and all these companies actually performed reasonably well, with a slight increase only for Brambles, Cochlear, and so on. And this will be actually put on the website in about a few minutes' time. Okay, now in terms of volume, we actually we have a radar, and we look for companies that had increase in the price and increase in the volume. We chase the volume. We see companies that have traded with volume above the average volume. The average volume is the 50-day moving average, like for instance here Qantas, over 50 days had a moving average volume over 50 days of 16.8 million. Well, yesterday we've seen 37.8 million transactions. The price was up, the volume was up above the average. This is actually creates an interest in what we do. ANZ Bank, we were actually very bullish for a few weeks, and we made a lot of money on ANZ Bank trading CFDs on the CMC market. And all these companies again have got increase in the price and increase in the volume. These are actually for the top 50, nothing on the bearish side for the top 50. When we look at the mid cap, we've got MASIM. Actually, this is a telecommunication company, was up 26% yesterday. We'd look at the volume, 374,000 the average volume, and yesterday we've seen 5.9 million. This is very much a company that we should be looking at if we can actually trade on the CFDs market. Okay, I want to finish off by showing that in terms of announcement today, we have got here the AIG Services Index. Actually, it came out at 8:30 this morning, 31.6. It's actually reasonably bullish. In terms of America, the US, we have unemployment rate tonight. The expectation is unemployment rate will be 19.5%. If this is lower, the market will be excited. If it's more, the market will go down. Consumer credit as well. Yesterday, all the results that we've seen, the trade balance, we had better than expected. We expected $7.5 billion. We ended up with 8.8, which was very positive. We expected the retail sale to drop by 17.9%. We only dropped 17.7. Let's say that's also as expected, but it appears green because it's less than what we expected. In terms of the American market, unemployment claims, they expected 1.82 million to go for unemployment claims. That was a bit higher, and that's why it's red. Revised non-farm productivity worse than expected, and that's quarter on quarter. And the trade balance, $49.4 billion trade deficit. Okay, finally, our disclaimer. Before you take any action, please talk to us or talk to your professional advisor. There is no guarantee that everything we said, we guarantee profit and turn it into gold. So remember, there is risk in the market, and you need to be aware of the risk and reward, and you need to analyze your risk appetite before you trade. If you have any questions, all you have to do is ask. Well, you can write to me at george@fssecurities.com.au. FS stands for full service. george@fssecurities.com.au. If you ring my mobile from overseas, it's 61, you don't need the 0, 61411259526. Ringing locally, you ring 0411259526. Happy trading, and I hope you make some money.